GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another weekly webinar. It's the final week before Christmas, which means the economic calendar is a lot slower, but actually there's some quite big moves taking place in the market, specifically a sell-off from the end of last week in stock indices looks to be accelerating, and a sell-off in oil also looks to be rolling over, and that rally that we'd seen in the euro and the pound and the other major currencies seems to be rolling over a bit too, with some dollar strength coming back into the market. Obviously there isn't the economic calendar to keep people interested, although there is US core PCE inflation, which ties into what markets are really worried about, which is Fed tapering. And obviously added to the Fed tapering debate is how that juxtaposes with Omicron and the new restrictions that seem to be coming in across Europe and potentially the United States. Okay, with all that in mind, let's have a look at the charts. We'll start with the currency market, we'll move on to commodities, then indices, then a bit of crypto. Let's have a look at the euro first. So you can see that the price is still in a trading range. This is our 4-hour chart. We've not been able to make it over, with that rally last week through the lows. We had a false breakdown, rallied to the resistance, and then just rolled over at resistance. We come back down to the supports again, and we had a little lift from there. So we're range bound in the short term, and buying and selling the top of this range has been a useful strategy, really for the best part of a month. But overall, the trend is still down. So with that overall trend being down, well, let me just quickly highlight that we've got this major support here, which we're kind of trying to bounce from, and on a weekly chart. I mentioned it a couple of weeks ago that we had some long legs, but last week was another down week, so we haven't really been able to make much progress after those kind of hammer type weekly closes and a couple of dojis as well, or spinning tops at least. So it's been going nowhere. Obviously, we can see that on the 4-hour chart with the range. You can see it on the weekly chart with the go nowhere candlesticks. And so we don't know where it's heading yet. We've hit major support, but the trend is down, and so my assumption is that the trend resumes. Now, I don't know if we get a bit of a bounce first. It would be good in terms of possibilities for where to enter a trade if we do. And just looking at, if I zoom out the chart again, this whole decline, you can see it's actually been respecting the Fibos quite well so far. So these highs were the 38.2, and actually this potential supply zone up here, the start of that is the 50% retracement, and then we got the 61.8 just before this support that got brokered in this latest leg lower. So if we do get a bounce out of the range, I'd still be thinking of it in terms of a general downtrend and looking at potentially these supply areas, these Fibo levels. Otherwise, it looks like if we get a breakdown through this support, well, obviously we've got that late November low as the next support, which certainly could work in kind of range bound conditions. And then finally, if you get the breakthrough there, that's when I think this long term downtrend just resumes and has another leg lower. We had mentioned last week that the pound was running into quite a major area of support. That's it's choppy for sure, but there's still a chance, and we're at the 100-week-ish. Actually, we can probably just change the visualization of that so we only see at the H4. That's not really needed. So you can see we are sort of trying to bounce off these this long-term area of potential demand zone. What's happened is that we had let's zoom in a bit. You can see we put in a few false breaks, then we made the move higher, and look on the 4-hour chart, and you can see. So I'm jumping around a bit here. The broken down trend line popped up through there, popped up through the 20-day moving average, but then just rolled straight back into the support. So that was obviously interesting because the pound got a good lift when the Bank of England raised rates last week. It was a bit of a surprise, but the pound has completely rolled over against the US dollar since. So people have used that Bank of England rate hike as an opportunity to sell sterling, and it After this false break through these trend lines, having hit this resistance and just slammed lower, we're not out of the trading range yet, but my best assessment is that, looking at things like this, that we are breaking lower. We're about to break lower in price as well. That's the way it looks. So we're at the last leg of support here, about 132. We've been struggling at 132 for a few weeks. To me, the most likely scenario now, having seen this false break to the upside, looks like that we break lower. And if we do, well, given that this has been a pretty major support zone, we actually could head a fair bit lower, under 130, I think. Dollar yen painting a similar sort of picture in terms of more like a top type formation, where we had broken through the resistance here. We had broken back over the 20 period moving average for the first time in a while, then we slammed straight back underneath it. So dollar yen rolling over a bit less kind of Fed related, a bit more Omicron fears related, so people moving back into the safety of the yen, and dollar yen seemingly rolling over a bit. So you can see here potentially a head and shoulders pattern, and this trend line kind of interesting, and this is like this connecting this high, this high, this high, then the most recent low. So I'll be looking out for whether there are any moves below that low, but also below that rising trend line may symbol that we're going to come back down. And there's a similar trend line which I left out, but I can just draw in for you now. So that would be kind of the bottom target. But this, I would say, we got a kind of false break through it, then it was a range, and then we broke above, tested. This is kind of the major form of resistance, turn potential support, if we do get a break through this kind of rising top channel line there. So a bit messy on the short term, certainly a range trading situation. And if we get down towards that trend line again, and these these lows where we had the false breakdowns before, still support, so potentially buying opportunities down there. But if we break lower, then we're looking to these downside targets. Switching gears to gold. Gold had a good week last week, although finished slightly soft on Friday. This major support still holding, so we've got a rally off that major support, and then weekly picture is still the same as it's been for a while. We've got that kind of triangle pattern going on, that downsloping trend line as resistance, and then we've got basically 1680-ish, 1670 as support. And then on the shorter time frame, on the 4-hour chart, you can see that we broke this downsloping trend line, having had that rally off, and we broke the 20-day moving average, and then just roll back from the resistance. So very similar-ish, but not as aggressive as what happened to the British pound and the euro, where made some good moves to the top side and then just rolled over. So maybe just maybe just generally emblematic of range-bound markets. So these breakouts just aren't working, or it's a sign that this dollar uptrend has still got more room to go. Silver potentially a bit more interesting, actually looks better than gold, so in my view. So this is our long-term support on the weekly chart. You can see this little arrow here showing that the support has held, and then you can see on the daily chart got that nice hammer pattern, rallied up to the resistance. Now we've stalled at the resistance, but on the 4-hour chart we could see the downsloping trend line. We're coming back to test the downsloping trend line. This was former support, and it's where this last bit of acceleration took place in the trend. So where if the buyers come back into this this kind of demand area down here, and just testing this trend line as it is at the moment, this, and then potentially just back into the longer term support zone, but ideally this area is where the price could actually find a base and accelerate up through the resistance. Now the trend is down. It looks a bit like these other charts where they have tried to break out and then fallen back from the resistance, so it's consistent with that, but silver looking like one of the charts a bit more likely to actually break out to the upside. Oil charts we mentioned at the start, that looking very soft here. You can basically see what's happened. We're in a big downtrend with that massive leg low when we dropped whatever it was, 10% in a day or so. Then we rallied up, and basically this first resistance, we tried to get through it 5 times, and I mention all the time that 1, 2, 3, 4, 5. If you can't do it on the fifth, you can often break, but if you don't, you see a big move in the opposite direction. That's what's going on. Dropped heavily through support here. If we can get a bounce up to these levels, it's not looking likely at the moment, but then that would be former support turning into resistance. But actually this looks like a pretty strong momentum play down into these lows. And then it remains to be seen if this low holds. Maybe this ends up being something like a double bottom, because we did have a big rally up, big drop down again, and then maybe just more buying comes in where it did last time here. It's not yet average consolidation with such a large bounce, more like a bottoming pattern. But the fact that we just really struggled to get through 73 shows that we're on for another test of basically 63, 62, 61 as the support. So oil still in a downtrend, and actually really accelerating back into the downtrend that was in place before. Now the S&P 500, mentioned at the start that we've been a few false breakouts to new. So we did make record highs last week, but we rolled over from a record high, and we've come down, and we're heading back down towards, it looks like, the 20-day moving average and these this low through here. So this is sort of has been resistance and support through here, and we're testing it again now. And so if this gives way, then we're coming down to some of these other demand areas, it looks like. So stock market's really basically struggling to get consistently, well, the S&P 500 specifically struggling to get through 4,700, and pulling back now in what looks quite extreme, and there's quite a good reason for it. The Omicron risk off moves, so potentially we're going to get a more severe move through the 20-day moving average, which hasn't really happened for a while. Actually, no. Well, I've got this label as the I think it's the 100-day moving average actually that's been more useful. Let me change that around. So let's just have a look. Insert moving average 100. Yeah, so 100-day moving average has been pretty good support, and you can see on a few times it's dipped below it but then rallied up. So maybe we get one of those, dips a bit but through it and then rallies up again for a final Santa rally. That's possible. But at the moment, looking a bit risk off, looking like another break through the 100-day moving average, which has been pretty consistent support. Last but not least, Bitcoin. This is the daily chart for Bitcoin. You can see there's just been a few kind of pivotal areas where the price has generally been respecting as a kind of support and resistance for just short-term trading, if you're trying to trade bounces off these areas. And so we're coming into one now, which is also the 61.8 retracement of this rally up from July through October. So we've retraced about 61.8% of that, so that's potentially an area of support. If that gives way, you can see this has been quite an interesting pivot area with various lows put through here, and it's the low from September, so that's pretty major support. Overall, we're just looking at whether it's a double top or not. It looks a bit ominous for Bitcoin. If you look at the weekly chart, looks like it's putting in some major double top, but who knows. Maybe buyers come in on this 61.8 retracement level, or even just back down at the 30,000 support level again, and maybe that's enough. It's just consolidating before the next bull market. Well, I'm going to leave it there. Thank you very much for watching. Have a great week trading, and I will not see you next week. So have happy holidays, and I'll see you the following week. Thanks, everyone.